Hey everyone, welcome to today's video where we're gonna cover NIO's Q2 earnings yesterday. We can see that in my opinion, the most important thing to take away from NIO's earnings usually is the net income or net loss. In this case, we want to see a reduction in their net loss because that points to a future of the company that they are moving in the right direction. One way for NIO to reach that, because this is in the very competitive automotive market, remember you have the likes of Xpeng, Tesla, Geely, Link and Company, you had Zeekr. I mean, there's so many different car companies out there essentially doing similar things. So there's not a whole lot of margin to be played with. So the one way that these companies can start to become profitable is to cut down their cost. And if there's something that NIO has not been great at is, controlling their cost, their operating expenditure, the research and development in the multiple different of cars that they have. We know that they wasted a lot of money on the adventures such as NIO Phone. NIO Phone, if you're new to this video and this channel, you know that they sell around 50,000 cars, I believe, in 2023 or 2024. And just to explain how bad that number is, remember that LG used to be one of the big phone manufacturers on the planet, or at least let's say top 10, because they're not big in comparison to Samsung or Apple for that sake. And LG in 2021 threw in the towel because they weren't having the same numbers. They weren't getting the same number of sales in terms of millions of phones being sold. So they threw in the towel after 2021. I believe that year they sold around 24 million phones globally, something thereabouts, around let's say 20 million or so phones. And then you have a company like NIO, making huge amount of losses over the past 3 or 4 years. You can see here, if you just look at the line 30, you will see that the sheer amount of losses that they have made quarter after quarter after quarter over these 3 or 4 years. And this is the reason why the stock price has been so much down over the past 3 or 4 years. And despite these losses, a company would need to have a management that, already back then, I would say already in halfway through 2023, when they started to go to 800 million or so net loss every single quarter, fire alarms should have gone off by the time for the management team. And they haven't done anything whatsoever to cut down the R&D and the research and development and the SG&A. You can see there that their R&D budget was at one time almost 600 million US dollar in the Q1 of 2023. In Q4 of 2022. And you can see that the SG&A budget at the most was, I believe, in maybe Q4 of last year. Yeah, you can see almost 670 million. So I told you that the most important takeaway from NIO's earnings is always the net income or net loss in this case. And now that we are finally moving in that direction, now that finally the management has started to implement cost cut, then you can see that it's also paying off to some extent. So again, the picture is that we are moving in the brighter future for NIO, at least as things are looking right now. And it all depended on the management finally realizing what the small investor and a lot of the critics have been saying for year in, year out. I understand that you need to have a huge amount of R&D budget, sure. But the problem is that a company such as NIO in dire situation financially, you could argue if they actually need this amount of number of models, because the more models they need to justify and do more research on, then obviously the R&D budget will be bloated. And we know that they have 10, 12 different models only on the main brand. Then we already have 2 models on Onvo and 1 model on Firefly. So combined they are closing to 15 different models. And on average, especially on the main brand NIO cars, sometimes they're not even selling a couple of hundred of those every single month. So it's just wasted capital, right? So this company has to become leaner. On Q2, we had a 420 million roughly on the R&D expenses, which is a reduction from Q1 at almost 440. So that's definitely going in the right direction. And that was also a reduction based on Q4 of last year at 498. So I quite like that almost 100 million reduction in R&D expenses. I still think there's a lot to do more there. Some of the comments have also mentioned this, that they want to have a ratio of around 5 to 7% of the R&D in terms of the amount of R&D related to the total revenue. So I would welcome that kind of discussions. We can also see that the SG&A is moving down already 100 million or so compared to Q4 of last year. And this all combines to our operating expense of about 950 million. And once you deduct the research development, the SG&A, and you can see that, yeah, we have roughly a net income or net loss just below 700 million. Is this number great? Not at all, but is this moving in the right direction? For sure. The most important thing, they're talking about Q4 profitability. And looking at Q4, first we have to look at Q3, and nothing will change. Like the average sales price will be stuck on around these kind of levels, 31,000, 32,000. So we know that if all for us to know in order to calculate the revenue for NIO is to take the number of cars we are expecting them to sell. So in Q3 around 90,000, and that number is quite secure, I would say. We already have 2 of those months in, and we're waiting for the September delivery numbers, which is the last month of Q3, and I would put us at around 90,000, depending on if we get, let's say, 35,000 plus deliveries or 37,000 deliveries in September. And I would say, I would argue that is possible. Yeah, I wouldn't say that it's 100% guaranteed that it will happen, but I would say that's possible. And now that you have, let's say, your 90,000 deliveries in Q3, you'd have your average sales price, somewhat of a reduction, obviously, and then you get your revenue. So that's not a big problem. And also just one really huge positive from Q2 is the huge increase in other sales. And now we are seeing some scalability. So other sales, 401 million in income there. And then you can see that the cost of other sales was just below 370 million. So there's a 30 million difference there on the positive direction. And this is for the first time that we see this huge increase in in scalability of the company and in the other sales, like including the battery swapping. So that is really, really one of the best takeaways from the Q2 earnings. And based on that momentum, I mean, you'd argue that based on a larger, 90,000 delivery number in Q3, maybe we'll have a slight bigger other sales revenue, 420, yet another all-time high in that regard. And I'm still assuming they're gonna cut down their R&D expenses. So now I went with a 6% decrease for Q3 compared to Q2 that just got reported yesterday. And then in addition to that, I say that I believe SG&A, they're talking about around 10% of their revenue, and that would mean that they have to cut it down by at least 8 to 9% already in Q3. So I'd say, yeah, we have to count on 505 million on SG&A for Q3. So that saved us almost 60 million or so US dollar from Q3 to Q2, right? So only just by, doing some minor cost savings, they're already down from around 1 billion and 150 million in Q4 of last year in operating expenses to potentially 890 in operating expenses in Q3. And that would lead to a net income or net loss of around 400 million. I think that's doable. I genuinely think that's doable, and that's the only way this company can survive. And then looking at Q4, this is interesting. They're talking of a potential of 150,000 deliveries in Q4. I would say that one is a little bit of a tough ask, because if you look at my chart of my expected delivery numbers, we already got the obviously August delivery of 31,305. That would be then a 37,000 delivery in September, in order to reach that 90,000 deliveries in Q3. And then we would need 40,000 in October and November and 45,000 in December. I mean, if we get those numbers, 40 plus 40 plus 45, that's 125,000. So the management is now talking about 150,000. That means that they need to, on at least 10,000 more sales in October, November, and 5,000 more in December. I wouldn't say that it's totally unrealistic, but I'd like to say that it's very tough ask, that one. I would rather stick between 120, maybe 135 on the top end for the moment. Let's wait and see how the weekly insurance data comes in China for the up-and-coming few weeks. But that's at least my understanding right now. So I went with 134,000 deliveries in, let's say, Q4. And the average sales price falling just below 30,000. Essentially 30,000, 29,900 gives us a revenue of 4.5 billion almost, with addition of some almost half a billion now quarterly other sales. That's actually quite huge for NIO in this case. That would mean that let's say a difference of 50 million between other sales and the cost of other sales. And you can see this on this graph that I always talk about, the white being the revenue from the other sales, the blue being the cost of other sales, and the green was the delta. And now you can see finally from Q1 of 2025 and Q2, we see a huge jump with the delta being on the positive side, positive x-axis. And that means that they're starting to make some money from, the other sales. You can see gross profit then with that kind of thinking should be 670 million. Operating expenses should be 810, which means the net loss would be around 100 million or so. Now, on the earnings, I believe the management has talked about non-GAAP profitability. So when, you exclude the stock-based compensation and things like that, it means that, they could just about be profitable by Q4. I think that is, the company is moving in the right direction. Even if they make a net loss of 100 million, that is a huge difference compared to what billion that they made in Q4 of last year. So I think, again, I'm standing by that. They have made a huge amount of improvement. They also made huge mistakes, and it took way too long of a time for the management to see the mistakes that they have done in terms of how much money they have wasted and in terms of how much share dilution it has been due to the wasted money. I mean, some of the comments always mention that you think you're better than the management. That's not what I'm saying. I'm just saying that, they have wasted. I mean, no one on this planet can defer they spend money on the Neo phone, like 50,000 phones. Come on, like, why would they even think that? So there's a lot of stuff that they have wasted money on for sure. I think it took way too long for the company and the management to see these mistakes, but they have finally woken up and it seems to be going in the right direction. As for the stock price, this is what I've been saying, like, is it possible that we'll see a final capital raise? For me now, it's like almost like even in the air, it's like 50-50. I don't know. I mean, you need to understand much more in detail the company's finances also from within. But I would say I wouldn't put it past Neo to raise somewhat of a capital at least one more time before end of the year. This is why I'm a bit cautious in going into Neo right now, investing in Neo. I would say I would much rather wait for Q3 and Q4 earnings, see how the development goes in terms of delivery numbers. If things are, panning out as I've been explaining to you on my spreadsheet, especially my expected, R&D and SG&A numbers, which is the only way for Neo to become profitable, to cut down those continuously quarter after quarter to much more reasonable levels, to also competing with their competitors like Xpeng and Tesla, then maybe it would be much better time to invest in Neo, because then you would know that the risk of another dilution is much lower. And even if the stock price has by then gone up to even $8 or $9, then at least you'll be certain that there is a future for this company. Because what could also go wrong is that, they raise more capital and, they fail in terms of like reaching the profitability goal, and they start to burn like, I don't know, like multiple hundreds of millions every single quarter again. And then you're in a really bad position. So I much rather, let the stock price run up a little bit, even to $10, and then be sure that, oh wow, even at 10 US, I mean, look at the market cap right now. What is the market cap of this company? 14 billion at around $6.5. Add to it 60% more, it's gonna be what? It's gonna be 25 billion US dollar at most, or thereabouts. For a company then that would deliver 130 to 150,000 cars every single quarter, and you'd be much more confident in, they continue in being profitable or getting there very soon in 2026. I think that's much more wise decision. But in summary, I think they are moving in the right direction. There's no denying it. It's just like, is it a little bit too late or not? I don't know, but I would say they are definitely moving in the right direction. Thanks for your time. Please like and comment in the comment section. Do you think Neo is finally moving in the right direction, and is profitability around the corner, maybe by Q4 or slightly in, let's say, in 2026? And yeah, thanks for your time and see you in the next one.